So here we have the blue chart is the amount of inventory coming on, and you can see from last July, this is last year, steady Eddie, decreasing in December. It's the fall, not a lot of people list, and then we come into our spring market, traditionally when we see a lot more inventory. However, then you can see this orange line, which is our sales, and you can see the sales were pretty decent last July, around about 90 sales, and then they kind of drift down, the second busiest time of the year going into the winter, and then they really had a good run here in the spring. And as we've headed into the summer, they've tapered off. But what you can see here is that they really have tapered off. And in fact, compared to the amount of inventory that's coming on, there's actually a lot of inventory accumulating in this market segment. So if you have been thinking about detached homes, listen up. And here's where we can put this all into perspective. This column here is the months of inventory. So you can see about a year ago, we were sitting at about 5 months of inventory, neither favoring sellers or buyers. And throughout the year, it drifted up into months of inventory that tightened up. Obviously, that makes sense seasonally as we head into the fall here, right? This is basically where we're at right now a year ago, but this is where we are today. And you can see how that the months of inventory has taken a significant jump, over 12 months of inventory as of August. And what has also been interesting is we haven't actually seen a lot of detached sales come through. In fact, so far, there's only been 4 reported detached sales this month. Sometimes it takes time for the sales to show up, particularly after coming out of the summer, because again, the activity doesn't happen in August. It usually starts again in September. And then you start to see people getting out there, putting out offers, doing the subject removals, and then the properties are reported as sold. And so we get a lot more of the sales towards the end of the month and into October. But this is an interesting place to be in the detached market. And you can also see what's happening here with prices. The benchmark price about a year ago was just under 1.9, jumped up just a little bit here, and then it softened going into the spring of this year. It kind of regained a little bit. And of course, these swings here, we're looking at between like 1.8 and 1.9. So, we're really looking at a $10,000 difference. So very much a stable benchmark price. However, you can see we started tapering off here, and we're sitting here at this 1.87 mark. And with that inventory building up, here's the scoop. If it happens to be that this inventory continues to climb, and we've seen a lot more properties coming on the market. It's fall, it's September. This is now the second most active time of the year where it's expected to see more listings coming on the market. And the demand does not keep up, where we are going to see further accumulation of inventory, which should probably put a bit of a downward pressure on prices. But the caveat here is the interest rates, because if you wait for lower interest rates, you could actually still end up paying more if you're trying to secure a home at a lower price once you do some of the math. So what could be an opportune time for any buyer that was thinking about getting in the detached market, whether it's now or 3 months from now? We don't know what this interest rate downward cycle is going to do. One would presume that the market's going to pick up, and then we're starting to see prices go up. But right now is kind of an opportune time where there is a lot of inventory. The market isn't moving too fast, too quickly, and therefore the upward pressure on prices hasn't showed up, and can be an excellent time for you to negotiate on a detached property on the east side.